Thanks for joining us. You're watching Notepad. I'm your host, Ibrahim Sani. Today we shall talk about the broader markets, the outlook, and perhaps some key stocks on the Bursa. And joining me is our longtime friend, James Hay of Pangolin Investment Management. James, again, thanks very much for doing this. I understand that you are slightly jet lagged. You just came back from the States. What were you doing there?
I was trying to drum up interest in my fund, which invests in this part of the world.
Yeah, the Pangolin Asia Fund.
Pangolin Asia Fund. Yeah. So I spent 3 weeks there, going around seeing long-term money, because we find that long-term investors tend to be congregated in the States, particularly the endowments, which are the university funds and other foundations. And they have clear long-term thinking. They understand this part of the region, they understand that it's growing, they understand it's peaceful, and the growth is likely to continue, some years faster than others. And they want to invest in it. But at the moment they're reticent, because this region, compared to, say, NASDAQ, is just not performing.
So that means there's no interest in emerging markets, or they just don't like Malaysia in general?
It's not Malaysia, it's emerging markets. And the thing is, really, over the last 5 years, the performance, compared to what's been going on in NASDAQ and in Wall Street, has been poor. And if you look at the investment profile of the endowments, and you look at their annual reports, the ones which have performed best are the ones which have had most NASDAQ, and the one which has performed worst are the ones with least NASDAQ, which includes emerging markets. We've had a strong dollar, and these stocks, you know, Google, Alphabet and everything else, just keep going up and up and up. And we're getting to a point, I think we're seeing capitulation. So things are getting very, very cheap here. There are a lot of very cheap companies in this part of the world, but there's no interest. And I think we're actually finding now a point where fund managers who understand the value are being pressured by the bosses to say, why do you keep buying in Indonesia or Malaysia, for example? Why aren't you buying here? Because our returns are less than some of our competitors, because you haven't got enough of it.
How do you then make a case when you meet these potential investors?
Well, you have to explain that value, in the end, always wins. If you buy something cheaply, you'll make more money than if you buy something that's expensive.
So did you win hearts and minds when you present this kind of argument?
I think I'm talking to people who agree with me, but the problem is, if they invest in our fund now, which is investing, we think, very underpriced companies, how long will it take before it starts performing? Because we're getting a bit like a broken record. It will happen at some point. You know, the ETF money, which just keeps flooding into the same companies and the same indexes, at some point that will stop. And then that will reverse, and then people will start to come looking at value again here.
So might as well get ahead of the game.
That's right, absolutely.
Very recently I interviewed two fund managers actually, talking about the notion of you investing, not you as in, retail investors, institutional investors continuing to invest in ETFs and robo-advisors, leaving 95% or the majority of the market out. You're depriving capital, basically, of all these companies. But there is no case to be made against ETFs at this present moment. And there is no...
Well, no, there's a great case to make against it, because you're not buying on fundamentals. You're buying purely on market cap. So you're not actually buying anything tangible. You're just buying size. And as long as everybody else keeps buying it, then the size gets bigger, and therefore more money goes into the same companies. It's an index thing. So there's a big case to be made against it, but the point is that it is performing, but it is a bubble. It's not based on anything.
So how do you solve this? Yeah, but how do you see this pan out?
Well, in my experience is that things correct and they revert to normal. So it's rather like and if we go back really a long time, we had the tech bubble. And I wrote about this in a newsletter a couple of months ago. That even back in 2000 or 2001, I can't remember the exact year, in the tech bubble, actually Warren Buffett was massively underperforming as all the money went into these overinflated tech stocks, you know, back in those days. And money was sucked away from companies that he would invest in. It was sucked away from emerging markets. It was sucked away from everything into tech. And we're getting money sucked into NASDAQ at the moment, and the odd sort of tech stock in China.
But even Warren Buffett is investing into Apple these days.
Yeah, he is. Yeah. But he's done well out of it. But at some point, value always works, and it's just a matter of time and waiting, because that's what happened in the past. You look at Warren Buffett, you look at emerging market companies. The good companies always do better than bad companies.
So, following back to Pangolin Asia Fund. because of the little to no interest coming in from the States,
Yeah.
how are you going to find your capital?
I don't think it's zero. I think it's just a matter of time until it comes. We have an interesting thing at the moment in that our top 5, we're a very concentrated fund. Our top 5 holdings account for about 50% of what's invested. We only hold 20 companies. We're not like a typical fund. We have very high conviction investment ideas. Of those 5, only 1 has any research on it. So what we're seeing at the moment, and this is really the opportunity, is that there are very few analysts left, and there's still plenty of analysts around, but there are nothing like the number of analysts that there used to be. And therefore, a lot of very cheap businesses, very good businesses, are just not covered. And this is where you get the pricing disparity. And we're seeing this more and more around the region.
Why do you think that there are a deprivation of analysts? Is it the research houses can't manage the overheads?
Absolutely. I mean, it is what it comes down to. The commissions are much lower. There are various reasons. If you talk to a retail trader, in the old days, retail traders used to trade through remisiers. They paid 1% commission, and they traded in Malaysia. These days,
those were the days when you yourself were.
Those were the days.
Yeah.
It was great days.
Yeah.
But now, if you speak to somebody who punts in the market regularly, he's just as likely to tell you that actually he doesn't buy Malaysian shares because nothing happens. He trades NASDAQ, or he trades, someone will say they're a day trader, but then what they mean is, in this part of the world, they're a night trader. They're trading in the US. After work, they go home and they trade on their computers. Their commissions are lower. They can be trading dollar, sterling. They can be trading anything. So a lot of people don't bother with this market anymore. We also have commission rates have collapsed. You know, in the good old days, it was 1%. Now, we pay 0.3. We could get away with 0.1 or less if we wanted. So the amounts of commission on lower turnover is much less. So there's much less to pay analysts.
My own trader's charging me 0.2, actually.
Yeah,
yeah.
0.2.
Yeah.
Yeah. We're a fund. We can get much less. Yeah. We also have the fact that passive investing for the last few years has done better than active investing in some cases, in many cases. For passive investing, you don't need any analysts. You just look at the big companies and you buy them. You don't need analysts. And therefore, you also have the thing from Europe, where European fund managers, and UK ones are included in that, are no longer allowed to combine research costs and dealing costs all in one brokerage fee. They have to pay for research separately. So in the old days, they'd pay maybe 0.2, and that would include research and everything else. Now they'd maybe pay 8 basis points, and they get a separate bill for research. And the broker says, you've got to give us 100 grand a year for research. And they say, what's the point?
Unlike a lot of managers out there, fund managers out there, you yourself do your own research.
We do our own research.
You speak to the management, you look at the businesses yourself.
Yeah.
So I guess you don't, in retrospect.
It's to our advantage.
Yeah, absolutely. Right? So you know which one is the gem, which one isn't.
We think so, yeah. So the fewer people looking, the better it has to be for people like us. And the main characteristic of companies which are not covered is the broking houses look at how much turnover there is every day and how many tickets they can write. And if something doesn't trade very much, then they won't cover it. And it's rather like chicken and egg situation. It won't trade until it's covered, right? But it doesn't trade because it's not covered. But at some point, if we're right, and the earnings improve, the dividends improved, and the value becomes clearly blooming obvious, at some point, some research house will make an exception and say, this thing is so cheap, I think we should cover it. Even just for our retail investors or for the smaller funds or whatever, it's so cheap we have to cover it. It won't be a major house, it probably won't be a Maybank or a CRMB, it might be a smaller one, like an Affin or an RHB maybe. Not implying they're small guys, but
I get your idea.
You know what I mean.
We'll go for a short break. When we come back, we'll speak more with James Hay of Pangolin Investment Management. Thanks for staying on with us. You're watching Notepad. I'm your host, Ibrahim Sani. Joining me is James Hay of Pangolin Investment Management. James, your newsletters are interesting because you're very candid with what you say. Last month, not this month's newsletter, was talking about Panasonic Malaysia. and you were...
It was last year, actually.
Last year, my
but
God.
I resent it to you because we want to talk about it again.
Yes.
Yeah.
Clearly, I read all your newsletters. There you go.
Not in the right order.
Let's talk about Panasonic Malaysia.
Okay. So we own Panasonic Malaysia. We're shareholders in Panasonic Malaysia. And the issue we have with this company is that they have too much cash. They hold 600 million ringgit of cash, which they don't need. The most they need is maybe 200 million ringgit of cash. So
who are you to say how much they need, how much they don't need?
Because we're shareholders. We are equal owners of the company, along with every other shareholder. And also we can analyse the company. Also we speak to the company. They tell us what their capex requirements are. So this money belongs equally to all shareholders. The issue we have, and as a business, we tend to invest in companies that are cash rich. So we run across this problem all the time, is that the return on invested capital, the return on the actual business of making ceiling fans, etc., is around about 40% in Panasonic's case. However, actually no, it's much higher. It's close to 60%. But then we have this cash drag when they're earning about 3% on all this cash, which accounts for 3/4 of shareholders' funds. So it brings all the returns down. Now, we reckon that if Panasonic behaved like a Nestle or normal multinationals, which said, this is how much cash we need for the business, and all the rest will come out as dividends, it would be on a Nestle type PE, which is about 40 times. Even if it went to 30 times, the share price would double, the yield would be significantly higher.
One can argue that if you don't like how the business is run, why don't you just exit?
Well, we can do that, but we can actually say we really like how the business is run, right? But we don't like how the cash is managed. And there's a huge scale of improvement.
So is this the case with Panasonic?
This is the case. There are a few issues here. Their chairman has been chairman for many, many years, and he was basically voted out by the minority shareholders last year, but he was kept in by Panasonic. All the board, many of the board members have been there too long. One of them is standing down this year, the chairman is not yet, are basically in favour of this cash placement, which doesn't, by the way, go into Maybank. It goes to something called Panasonic Financial Corporation, which is like their own bank within Malaysia. And then it is placed with Maybank, but some of it, not much, but some of it is then lent to sister companies. Now this is a bad use of shareholders' money, because this money is earning 3%. We reckon we can earn 10, 15% a year in the stock market, right? That money should be returned to us, and then we should decide what to do with it. It shouldn't be kept for Panasonic for the benefit of one shareholder, which is basically the parent.
So we're talking not just about corporate governance issues, we're talking about how they manage their cash business.
Well, we come across this all the time.
Yeah, but the right platform to raise all these issues and concerns is at the AGM.
Absolutely. So the problem we have is that we can't persuade the other, if you look at the major shareholders, right, there's us, there's Aberdeen, and there's a couple of others. But the other big one, the ones who are decisive on this are QAP and EPF.
Yeah, KWIP and KWSP.
Yeah. And these are the guys who could vote against it, because Panasonic themselves, because it's a related party transaction, because this money is being placed with an entity owned by the parent, can't vote on it. So we could easily vote it down if the EPF and QAP would come on board. But for some reason, they are improving. They're spending more time on corporate governance. There are small victories coming. However, they don't, in my opinion, as far as I can make out, at the top level, they don't want to rock the boat. And it would be seen to be rocking the boat in this case. There's no need for Panasonic to sit on this money. They don't need it. It should be returned to all shareholders.
Perhaps there is a case for you to speak to KWIP and EPF.
Obviously, we have done. Yeah?
And what did they say?
Well, I think at certain levels, they agree with us. But maybe when it comes to people who make the final decisions, there's a thing, they've always done it. It's a good company. The dividend's got a bit higher. Why rock the boat? But actually, this money belongs to all shareholders and should be returned. And it just seems to me that, quite obviously, and we've given them a presentation which basically points out that the share price would probably double. I can't see why they wouldn't want that to happen themselves.
All right. We'll take a short break. When we come back, we'll discuss a little bit more about geopolitical situation here in Southeast Asia. Don't go anywhere. Thanks for staying on with us. You're watching Notepad. I'm with James Hay. James, the timing of this interview is actually quite interesting. President Jokowi of Indonesia is in town in Kuala Lumpur for a 2-day state visit. There's also talks of him moving the capital of Jakarta somewhere in Kalimantan, nearer to either Kuching or Kota Kinabalu. These are situation right now that is happening in this part of town.
Yeah.
There's also the situation of the premiership of Malaysia. Succession planning has always been something of a debate between investors and regular Malaysians outright. What is the condensed feature that you can share with us because you're here in this part of town for the past, 3 decades?
What do you want me to comment on first? Indonesia?
Yeah, let's start with Indonesia.
New parliament?
Yeah.
I can see why they need to do it, why they want to do it. Half the population is in Java. They need to make the other provinces feel Indonesian, and there's a lot of pushback. There's a lot of, there is no such thing as an Indonesian. You've got Javanese, then you can split that up between Sundanese and everything else. And so it's the old Dutch East Indies cobbled together as one country. So they want to make the outer provinces feel properly Indonesian. But there is obviously resentment from the people of Kalimantan against the transmigratory program, which has basically been Javanese being relocated to that part of the world. And we saw it 20 years ago in horrible race riots there with the Dayaks beheading people. So, obviously one has to move at a... It makes sense for them to do it. But how popular it will be in Kalimantan, we'll have to wait and see.
I want to talk a little bit about the environmental aspect of this, because I know for a fact that you guys are big on environmental issues. In fact, your fund is named after Pangolin, right? So we now know that because of the fact that they're moving the capital to Kalimantan, deforestation is going to happen. That goes without saying. Development is going to take place in spite of the natural resources.
I think we have to have development everywhere, right? We have to have development. I don't think building a new capital is going to be the biggest problem, right? The biggest problem is the clear felling of timber and then planting of palm oil. There has now been a complete moratorium placed on all clearing of forests in Indonesia. The enforcement is the major thing. I'd say Indonesia is well ahead, actually, now of what is happening in Sarawak, say, where nothing has really changed. And Malaysia's log exports, Malaysia is still exporting raw logs, and this is just nonsense, right? So I'd say Indonesia is ahead. Maybe it's because Jokowi has a seat at G20 and talks to these Western leaders and understands, maybe he gets more input from the global issues. I think to a certain extent, Malaysia is lagging Indonesia on this. I think we saw it when there was an international school put on a school play about the plight of the poor orangutans because of logging, and the outcry wasn't, oh yes, this is terrible, we should stop logging, but this is terrible, we should attack this play because they're being anti-Malaysian and anti-palm oil. And I think it was disappointing.
Sorry, that was so bizarre for me as well.
It's very disappointing that the new government is sounding a bit like the old government on palm oil, quite frankly.
Well, perhaps because many of them are from the old government.
Possibly, yeah.
And speaking about the new government, again, the issue of succession, does it bother you?
I think so. I think.
So you're not sure whether it bothers you or not?
No. Because the problem is there's always too much expectation with a new government. Yeah, there's always a lot of hope. It's a bit like when Obama was voted in. There's a lot of hope and expectation, and actually, in reality, life tends to go on. I think life has got a bit better here. I think it would certainly help if the Prime Minister were to say, so-and-so, i.e. probably Anwar, will be Prime Minister on this date, which is basically what I implied before the election.
Yeah, absolutely.
But there's obviously pushback. It's a coalition. It's normal. One will have to get used to living with a coalition. It would be better if there was certainty.
We don't have much time.
Because otherwise, if Dr. Mahathir, he won't live forever. And at some point, it would be nice if the succession was in place, rather than having the four coalition parties
Does this
fighting.
materially disrupt how you do things?
No, it doesn't, because business people go to work, they make a product every day, and they just get on with making a product and selling more than their competitors do and getting more orders, and they worry about politics and economics later when they get home.
Finally, we go back to your home country. Apparently there's a new Prime Minister in town. And he seems to be sharing some of the views that you are sharing as well in terms of no deal Brexit. Remember last time we spoke just a bit about that.
Yeah.
So well, I've never met anyone else happy that Boris Johnson is in office.
Yeah, well, I'm quite happy. Quite frankly, I think he can get Britain over the line with this Brexit thing. And again, it's all about certainty. So once there's resolution, i.e., Britain's left because Britain will leave because it voted to leave, then there's certainty. Then one can start living with the new reality. And
Former
that's
Prime
what he's
Minister
aiming
John
for.
Major came on the BBC Hard Talk program, and John Major was asking the interviewer what the no Brexit deal was not part of the conversation of the Brexit referendum. That's what he's trying to say. This thing has metamorphed itself into something different.
I wouldn't say that's true. Actually, it was an in-out referendum, right? So the people voted out. So no one said deal or no deal or anything else. They voted out. There were no other questions. It was, do you want to be in Europe or not? It was in-out, purely that. So I think he's being slightly not true on that. Of course, one prefers a deal, right? But I think in reality, everybody will have to deal. I think actually it's going to be like the millennium bug. If you remember that, everybody thought
Y2K.
Yeah, everybody thought the computers in the world were going to stop, and they didn't. It was just a false alarm. I think with Brexit, no deal or deal, life will continue pretty much as normal from the 1st of November.
So from a macro perspective, you didn't see any trouble if Brexit...
Well, it's possible. There's possible problems. But I mean, you have to think the biggest buyer biggest export market for German cars is the UK. The biggest export market for French wine is the UK. So if they cut off trade with the UK, Europe will suffer as much as anything else. They might do so because it's a political experiment, and they'd rather, think that they're right and be poorer, and because this is part of the reason people voted to leave, because the EU would, if you look at the countries of southern Europe, like Italy and Greece and others, they'd be doing very badly because of the euro. But politics carry on because it's all about keeping it together. So it's possible there'll be problems, but I doubt it, frankly.
What's next for Pangolin?
Nothing. We just keep doing the same thing over and over and over. We keep seeing companies, we visit, we read research, and we do more visits and more visits, and occasionally we buy a new company. We started buying a new company this year. We only own 20. It takes a long time for us to decide to buy something. We think we've got something significantly undervalued. It's in Singapore, and it's one of our top 5. Again, as I say, has no analyst coverage. We think that will change at some point. It might be 3 years, might be 5 years, but we think we'll do that. So there's no change really in what we do.
All right. That was my conversation with James Hay of Pangolin Investment Management. He runs the Pangolin Asia Fund. If you missed any part of this interview, just log on or head to AstroAwani.com, look for Notepad. These are kind of interviews are there. You can also stream these kind of interviews on your mobile devices. Just download the AWANI app on the Google Play and the Apple App Store. Until next time, thanks very much for watching and goodbye. Great.
Goodbye. Thank you.